please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
As we have been talking about through the last few quarters, we've been focused on trying to get back to the double-digit trajectory. Still a tad short of that, but we have the momentum, and most importantly, the broad-based growth coming across all segments, especially the turnaround that we're seeing in both BFSI as well as North America, is giving us a lot of confidence that we should be able to get there.
Okay, let's talk about margins then. And I'm quoting what you said, the strong start gives us a greater ability to get to our preferred margin range of 26 to 28%. It's going to happen in FY19. Are you confident about that? X of rupee.
First of all, it's not X of rupee, it's including rupee.
No,
which
as in irrespective of what rupee happens from
that
here
is
on.
true. No, but we don't want to put a timeline on that. I think the important levers are that are we getting growth back into across segments? Is there a broad basing of the digital revenue? All of those are kicking in, but I wouldn't want to put a timeline on when we want to get back there. It's the target band and we're quite confident about getting there.
Digital is now $5 billion of annualized revenues, 25% of a very large book that is TCS. The pace of growth has picked up. See, a year ago it was growing at 30-35%. Now it's growing at 45%. Is it sustainable, and are the contract sizes getting larger and longer tenure?
So the contract sizes are definitely getting larger.
So what is this rough size, average size or range now?
You know, Rima, again, we have said this in the past. For us, more and more, digital is now becoming integrated into more complex contracts. So the breakout of it is more in terms of the services that we deliver. But at a contract level, it is not as if it's a digital contract versus a non-digital contract. But the scope of work is significantly increasing, and it is becoming more core of what we're doing. So given that, will the growth momentum at 45%, will it accelerate further and all? It's difficult to say. But last year we grew at 30% plus. Definitely this year also in digital, we should be well on our way to achieve better than 30%. So beyond that, it is, it's at a level that it's very difficult to call.
Your manufacturing and high-tech grew lower than the company average. Any particular issues there?
It's, there are, clearly, if you take the automotive side of it, they're all focused on the autonomous vehicle programs. Then they are figuring out, how they should play out the electric vehicle initiatives. And some of these things have resulted in slowdowns in some of the, let's say, the car manufacturers. Whereas, we see a corresponding investment that's happening on the OEM providers, right?
Okay.
So, I think it's only a question of time before they turn around.
But say automotive manufacturing could remain slow for some time?
Maybe in another quarter or so, we should have better visibility for that.
So far, you've managed to grow without making any acquisitions, which is what makes TCS's growth so special. It's organic. Are you looking at making any acquisitions?
So it's an important one that we have always been, as I said, open to acquisitions. Yeah. But it is important that the turnaround was achieved organically, because it's a validation of our strategy and positions us well and takes away a lot of the negative commentary or the doubts that were expressed. Given where we are and the foundation that we have, we will be open to incremental acquisitions to accelerate this momentum that we see, so which continues to be the focus.